Hey guys, Taylor with GammaEdge here. Quick question for you guys. Are you ever trading stocks that look bullish, but you kind of find yourself repeatedly getting stopped out of those? One potential reason for that is because you're fighting a deteriorating market structure. And by that, what I mean is what is happening under the hood between call and put speculators. The reason that you may be missing this is you're just staring at the chart. However, as we talk about down here, the options market has significantly grown since 2020. Because of that, stock options and kind of the battle between call and put speculators now plays a very important role in how spot price actually moves. This is specifically what we focus on at GammaEdge, and what we want to understand is how is that battle between call and put speculators within the options market shifting throughout time. We like to think about it as a sine wave. As call speculators are increasing, kind of bullish conditions under the hood are increasing as well. And then eventually that peaks. You start to see call speculators leave the complex, put speculators start to come in the complex. That bullish foundation erodes. And then again, this cycle as a sine wave just continues to repeat throughout the battle between call and put speculators. And so with that, there are two specific tools that we have developed at GammaEdge to help us understand these market dynamics occurring under the hood, and those are called the GEX ratio and the delta balance command. Let's get into both. So the GEX ratio is simply just a measurement of total call gamma in the complex divided by total put gamma in the complex. And when I say complex, I mean all expirations within the option structure. So whether you're looking at SPX Apple, you can run this ratio. And while that may sound technical, right, you can think of it as just a supercharged version of the put-call ratio. However, the reason that we think this is a superior ratio is because we incorporate time into the ratio, which is done through the use of gamma. And the reason this is critical is because, as an example, imagine someone opens 100,000 put contracts a year from now. The traditional put call ratio would spike massively, right? And Twitter acts would go crazy about, oh my gosh, it just spiked crazy. However, we know through our GEX ratio that trade really does not matter because it's a year out in time. That really does not have a big impact on market structure today and in the near term. And as traders, we care about what's happening in the near term, and so therefore that is kind of the utility of that ratio. However, that point in time ratio is important, as it can tell us if that ratio is above 1, calls are dominating. If that ratio is below 1, puts are dominating. However, we also want to understand what the trend of the ratio has been historically, and kind of between the upper and lower bounds of that range where we currently sit. Because one important thing to note is individual stocks typically have a ratio that is a lot greater than 1%, while SPX tends to oscillate around 1. So looking at a real example of Tesla, down here, this is a visualization of our GEX ratio chart. So what we can see is kind of this parabolic run starting in October through December. We can see that the GEX ratio was broadly trending higher as well. Yes, we understand that it can be a little bit volatile from day to day, but again, kind of like price itself, we just want to understand what the general trend of the ratio is. And then what's even more important is the GEX ratio oftentimes leads price lower. So it rapidly deteriorates, like we see in this December 2024 through February 2025 decrease. Just look at the rapid deterioration of GEX ratio, and it even led spot price down as well. So while we may have seen, these little wiggles in price along, GEX ratio was just maintaining in the kind of lower fourth of its range, which, signals such, right? Like call speculation is not coming into the name at all. So then just connecting this to the web app too, right? Like a regular web app, here's a visualization of Tesla's market structure, option structure from 2/14/25. And again, we can see a real lack of out of the money call speculation in the complex. It's mostly in the money puts are dominating, which we know is not bullish. As we talked about in the beginning, price is driven by out of the money call speculation. So, bullish foundation, we want to see out of the money call speculation in the name. And one thing to know is, while GEX ratio is important for us to understand kind of where we have been in terms of strength and where we currently are, DEX our delta balance command, which we're going to talk about next, helps us kind of understand what the future expectations hold in a stock. Because remember, the options market are forward looking by definition. And so we can kind of understand what position is like in the forward out expirations can kind of help us understand today, okay, are market participants expecting for, condition, are they expecting to be, bullish or bearish? So getting into the delta balance command itself, it's broken up into 3 components. The green line, this is what's happening above spot price. Remember, that can only be in the money puts or out of the money calls. So above 0, out of the money calls are winning the battle. Below 0, in the money puts are winning the battle. We have the orange line, which represents below spot price. So that can either be in the money calls or out of the money puts. Again, above 0 means that in the money calls are winning the battle. Below 0 means out of the money puts are winning the battle. And then we have the blue line, which is the net of the green and the orange line. So that just tells us, when factoring in what's happening above and below spot price, above 0 is, calls are winning the battle, and below 0 is puts are winning the battle. And typically what we see is in sustained periods of an uptrend, we see this ratio pinned to 1 because 1's the maximum value of this oscillator, and -1 is the lowest value of this oscillator. And during kind of decline and choppy conditions, we see that the delta balance ratio is quite erratic, which we'll get to in examples below. But that's just kind of a rule of thumb to understand. And then we also want to hit on the main purpose of this chart, which is the future expirations. So everything to the left of this gap is what has happened. Everything here is the future. And so we can see those stars mark in expiration. So here we're plotting the next 3 expirations. And just looking at this, we can see that the green line, right, which is the right-hand plane above spot price, this is above 0, trending higher, constructive. Means calls are, outpacing in the money puts above spot price, and it's expected to increase as we get further out in time. And then the orange line, right, we can see that this also is firmly above 0. So those in the money call speculators are expected to remain in control. And then the net delta balance line, which is the blue line, that is pinned at 1. And remember, our expectation is when things are pinned at 1, that is ultimately constructed that calls are in control. So we would expect, bullish foundation price to continue to remain sideways to higher. Right, and the thing to point out, about this chart too is, right, just how the net delta balance was pinned at 1. And we expected, and we saw that rapid price appreciation, right? Exactly what we expected to see because, calls were in control and they stayed in control. And so a few things wanted to point out here real quick, watch for divergences between current and future positioning, and then pay attention to when the lines start to trend in new directions, especially when they cross 0. So that's either from below to above or from above to below. Now, I want to note that this example was from 2/14/2025. It is 3/22/2025. We know that it, starting really 2/15 and below, we started to see a massive kind of rapid decline in the markets, while this was pinned to 1. So, our expectation was for this to continue higher. So we want to review now kind of what those subsequent pictures look like, so you can kind of understand the utility as to how it could have helped us sidestep this, because it did in real time. Ultimately, you're going to have to take our word for that. But what's also important to understand is we need to focus on the process over the outcome, right? We just need to understand how these tools help us. Because it's very easy, right? If you just look at this in a vacuum, be like, oh, well, I would have missed that decline, then I would have worn that loss. But that's not true. The reason for that is, getting into this right now. So here is the delta balance command from 2/19/2025. So, just a few days later. First thing to note is we saw the right-hand plane, which is that alimony call speculation, that started to drop below 0, trend lower. That is the first warning sign. Hey, something may not look right here. Additionally, looking out into the future future expirations, we can also see that the net delta balance broke below 0 as well. Again, another telling sign that something is changing, because we went from railed to 1 to now we're dropping below 0. And then again, fast forwarding to February 22nd, again, we can see from that point on 2/19 when this broke below 0, this continued lower. So price has market structure has not recovered. Price didn't as well. And then using this tool to look out into the future, we can also see that, again, conditions are not expected to improve within the next two expirations. So going through those three meta examples, it should be clear, how we can see that transition, from these bullish conditions to the first signs of weakening to then ultimately, those weakening signals coming to fruition and how those future expirations are pointing to further weakness as well. Let's walk through one more example, this time going through Apple. We're going to go through the GEX ratio and then the delta balance command as well. So looking at delta balance first, we can see that the Q4 of 24 run, price and both the GEX ratio were moving higher. One interesting note is that, kind of in the beginning of the middle to end of December, we started to see kind of a rapid oscillation of the GEX ratio. This means that, there is a decent bit of fluctuation in call and put speculation. Note that we're well above 1 and into the 4s. So remember how I'm talking about those local highs and lows. It's important to be cognizant of where we are in that ratio, because once we start to get to an extreme up above, that kind of means everyone's towards one side of the boat. When we get the extreme to the lows, that means everyone's towards one side of the boat. So you can see how the GEX ratio peaked well before price did back in the middle of December. And so this was kind of a tell to us about, hey, those calls are not continuing to come in. That incremental buyer is not continuing to come in from an options market point of view. Yes, price did go a little bit higher, but then it proceeded to, crater a good bit, into the January. And again, this happened subsequent to the GEX ratio declining first. And then we got a little bit of a bounce late January, early February. GEX ratio recovered a little bit, but then, it declined in tandem and even before than price itself did. So then how this marries up with the GEX ratio, again, back in that December increase, we went from very choppy conditions, oscillating back and forth between 0 and 1 to railed to 1 for, the month of December, really, or kind of middle of November, middle of December. And then again, we start to get these rapid back and forth of the net delta balance command between -1 and 1. We know that is not conducive to what we see during uptrends, during general periods of uptrends. We were pinned to 1, certainly not the condition here. Then, when we saw that little impulse move higher, that corresponded with, a couple weeks of the net delta balance command pinned to 0. And then that subsequent February decline, we saw again the delta balance command really deteriorate there as well. And so as we sit right now, price is bumping along the lows. Delta balance was pinned to 1 for a few days. However, looking out into the future, we can see that those conditions are really not expected to persist. Expecting to see a little bit of weakness here. So we'll see if that actually comes to fruition or not, but we just understand again, right? Yeah, okay, price is bumping along the lows. Structure itself is not improving really. The GEX ratio is not improving really as well. So like, why jump in now? Why not wait till we see, consistently see net delta balance railed to 1, GEX ratio materially improving, market trend model improving as well, and this would give us a lot more confidence to step in. Just remember, catching the turning points is hard. That's a hard business to be in, but we're more interested in catching the meat of the move. So let's give it a little time. Sure, you're not gonna be the first one on Twitter calling a bottom, but so what? Like we're gonna be catching the easier part of the move where it's pretty definitive that conditions have certainly improved. So with that concludes our lessons. Hopefully you understand how GEX ratio and the delta balance kind of interact together to really help us and act as our market GPS. Specifically, they help us, spot deteriorations before it shows up in price, validate, bullish and bearish conditions are strengthening or weakening, see what speculation looks like in future expirations, and then, bringing all those factors together, they're able to help us, find those most constructive stocks to be in, whether that is bullish or bearish. Last thing is, remember, it's our belief that everything really in trading short term is focusing on the battle between call and put speculation, because going back to the beginning of the lesson, the growth of the options market, this really has a massive impact on what is driving spot price day to day. And these tools are valuable because they let you understand and see that battle happening and help us visualize and measure both the call and the put dominance. And this ultimately helps us put us on the right side of those structural moves. So with that, really appreciate the time. We have a couple free education courses that hit on this, specifically the GammaEdge framework. This is our flagship education course. It walks you through our entire methodology. These two tools are only a part of that, but they are a critical part. You can find more details on signing up for that course in the description below. All right, thank you for the time. Bye.